Talk to us about markets' response to the CBK's decision to raise interest rates to 7% yesterday. Some are saying it's a bold move, others are saying not bold enough.
Interestingly, I think the market seems to, although the reaction was mixed, if we look at performance of the equities market, it seems like medium to longer term investors have bought into the monetary policy decision. But I think as far as the shorter markets are concerned, there seems to be some form of uncertainty regarding whether the decision will actually impact on exchange rates and inflation moving forward.
The response from the fixed income side, because I think this is where Kenyan securities have really taken a battering, particularly with the flip-flop that we've seen on monetary policy. Are we likely to see rates and yields becoming a lot more attractive? And then you've just spoken about inflation. When the CBK decides to hike so boldly, is it likely to mitigate against inflation that's in the region of 16.7%?
I think it depends on two factors mainly. If you look at the monetary policy statement made, the indication is that they're really going to be watching on expansion of credit, not so much about food and energy prices, which they have literally very little control over. And I think investors have been buying, seem to have been buying into that, because if you look at the current forecasts, there are indications that the short trends expected from next month are going to be sufficient, which of course means food prices are going to come down. And of course, there's going to be less pressure in terms of importing diesel to generate electricity. So I think from that perspective, if you look at the short term, there's a high likelihood that the rate of inflation is likely to come down. But I think as far as growth of credit is concerned, there's also an indication, I think, that that is going to be reined into, at least to ensure that demand side inflation does not also accelerate.
Raising the interest rate, the bearing it's going to have on credit lines in Kenya, obviously the cost of borrowing will increase, but significantly or not?
I think we are not likely to see a very sharp rise in lending rates, because that's likely to be adverse in terms of affecting banks' books as far as the default rates are concerned. We think largely banks are going to respond to it by cutting their deposit rates to maintain their spreads. However, what we are likely to see moving forward is an element of crowding out of the private sector, and more so because the government still needs substantial amounts of money to fund its deficit. And I think faced with that situation, commercial banks are likely to be compelled to lend more to the government than at attractive yields, for that matter, than to lend to the private sector at possibly slightly higher yields and in a soft economy, raising the possibility of an increase in default rates. So I think the losers in this case are likely to be the private sector in favor of the government in terms of crowding out is concerned. So credit, I think the environment is likely to favor government more than the private sector.
Let's talk about what we're seeing on the equity side. As I mentioned earlier on, Sasini seems to be a major gainer in today's session and yesterday. And I think that's on the back of announcements that they're planning to diversify their portfolio, not just to be a tea producer, but to use some of their coffee plantations for real estate.
That is perhaps one of the main reasons we've seen the price rallying in the last couple of days. But I think also coupled with that is also the depreciation of the shilling and also favorable prices of tea and coffee in international markets, which are expected to impact positively on their earnings. Because by and large, the real estate move is not likely to be reflected in their medium-term results. And I think the factors playing out currently, I think, is really earnings prospects in light of the shilling exchange rate and prices of their commodities.
Let's talk about KQ. They're also in the news at the moment. We're hearing about a rights issue that is just subject to regulatory approval very soon. Now, what is KQ trying to do? Obviously, we've seen them expanding their fleet, trying to expand on their route network. So obviously, there's a growth plan here. But on the other side is the fact that the Treasury's cut their allocations to the national carrier.
I think KQ's case is rather interesting, that in as much as global airlines are facing a difficult time, especially on the back of higher fuel prices, KQ's fortune seems to be different in the sense that domestic tourism is actually picking up. and they expect that to continue moving forward, hence the decision to increase their fleet size. And I think, by and large, we think that the rights issue will be substantially taken up, especially if you look at the key shareholders. And there are indications that whereas Treasury might have cut what they were looking at getting in, there are indications that they might actually come through later on. I mean, I think we are likely to know the full situation after the announcement is made about when the rights issue will take place and the numbers underlying that.